Welcome to our guide on navigating U.S. taxes after marriage and immigration. If you've recently moved to the U.S. and married a U.S. citizen, understanding your tax obligations is crucial. In this video, we'll explore common scenarios and the best course of action for dealing with taxes after marriage and immigration. In this video, we will cover several important topics: filing status options like joint versus separate filing, how to determine your residency status with the substantial presence test, income and taxation considerations including foreign income, and best practices and recommendations. Finally, we will include a disclaimer section. As a newly arrived immigrant, you and your spouse need to decide whether to file taxes jointly or separately. Joint filing can offer potential tax benefits, but requires both spouses to be taxable residents. This decision hinges on whether you elect to be treated as a U.S. resident for tax purposes. On the other hand, separate filing allows you to file individually, which might be simpler initially, but could mean missing out on certain tax advantages. The substantial presence test helps determine your residency status for tax purposes. In this test, physical presence counts any days spent in the U.S. toward residency status, regardless of visa status. Meeting the threshold of days may classify you as a tax resident, even if you aren't a permanent resident in the immigration sense. The U.S. taxes its residents on worldwide income. This means any income earned outside the U.S., such as in the UK, could be subject to U.S. taxation. The foreign income exclusion allows you to exclude a certain amount of foreign earned income, but eligibility depends on your resident status and the nature of your foreign employment. Some key considerations include tax treaties and dual status. Tax treaties with countries like the UK can prevent double taxation on your income. Additionally, if you're a resident for part of the year and a non-resident for another, you may be considered a dual status alien. This requires thorough and careful tax filing to cover each pertinent period accurately. To navigate the complex tax rules as an immigrant, seek professional advice by consulting a tax professional or accountant for tailored guidance. Review IRS publications like Publication 519 and relevant tax treaties. Ensure to document everything meticulously, from entry dates to visa status, income, and taxes paid abroad. Don't forget about state taxes, as they can add additional layers of complexity. It's time for a quiz. What is a potential benefit of jointly filing taxes as a newly arrived immigrant? Option A, simplified process. Option B, potential tax benefits. Option C, no tax obligations. Option D, immediate green card approval. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is Option B, potential tax benefits. By filing jointly, you could access certain tax advantages and deductions that might benefit your overall financial situation. Let's recap the key points covered in this video. First, decide whether to file jointly or separately based on your residency. Determine your residency status by using the substantial presence test. Remember to include your foreign earnings in your U.S. taxes, unless you qualify for exclusion. Finally, always seek professional advice for guidance tailored to your unique situation. We must provide a disclaimer. The information in this video is for educational purposes only and does not constitute financial or legal advice. Always consult with a tax professional for personalized guidance tailored to your specific circumstances. Thank you for watching this guide on navigating U.S. taxes after marriage and immigration. Please like, share, and subscribe to our channel for more insightful content. We also encourage you to share your thoughts and experiences in the comments below. We love hearing from you.